the federal rate is the rate at which banks can borrow money,
Yes.
right?
You're saying, should I wait to buy a house? The supply and demand is still your big factor. The banks are still playing hardball, and they don't even want to lower their rates.
So the Fed just lowered interest rates by 0.5 point. And ABC News and all of the other experts out on the interwebs say that they will lower another 0.5 point by the end of 2024 and a whole point by the end of 2025. So what does this mean to home buyers? Eric, what does it mean to home buyers? Wait, and do we wait? Well, not we. I have a home. But do home buyers wait until the end of 2025 to get that whole 1.5 points more?
So in theory, what everybody's going to think is when the Fed lowers the rate, it means that your actual interest rate on your mortgage or a home equity loan or anything is going to also be lowered. So remember, banks don't always do that. So
why wouldn't they? That's shady, isn't it?
There's so many details behind it, but every bank has different structure, different rules. And just because the Fed lowers the rate doesn't mean that the bank is going to lower the rate for you. It also could take time to take effect. So there's so many different things that could happen. And you're saying, should I wait to buy a house? The supply and demand is still your big factor. If there's no houses on the market in the town you want to be in and one pops up, don't wait for next month for the rate to drop because the house won't be there.
Well, okay. Let's take it back a step.
Sure.
And explain to me. So we know that the federal rate is the rate at which banks can borrow money,
Yes.
right? Why is a bank borrowing money? Explain that to me.
Sure. So banks, they start with a certain amount of money and then they take deposits from people. And in theory, they lend out deposits. There's regulations that say, and I don't know specifically the number, but let's say the bank takes in $100,000 of money. There's a percentage of that money that they're allowed to loan, and there's a percentage of that money that they have to keep. So let's say they can loan 50% and they have to keep 50% on reserve. They also can go to the Fed and they can borrow money that way, which allows them to lend more money. And that's how banks make money, by lending money.
Got it. So that's the interest rate that the bank actually borrows at.
Yes. And then they mark it up.
All right. And the Fed uses the interest rate to either slow down the economy or stimulate the economy,
Correct.
right?
Right.
So why, when they raised the rates, why did they slow down the economy by raising the rates? What did it do?
Sure. So when you go out, and we did an episode once on Mercedes, right? Buying Mercedes. So if a Mercedes is more expensive, what happens? Less people buy it.
Correct.
Okay. So when the interest rate that the government loans the money to the banks at gets higher, okay, it means your mortgage, the rate is higher, which means that you can't afford to borrow as much.
Right.
Okay. And when you can't afford to borrow as much, in theory, that trickles over to the housing, and then the price of the house has to come down.
So it's sort of making inflation go away because people have to start lowering their costs.
Yes.
Because the normal person can't afford their products. So
but if you're in a town a town that has two houses, right? Then it really has no effect. Because there's always someone that can afford that house, whether the interest rate's at 6% or it's at 5.5%.
Right.
So in generally, this is something that's broad throughout the whole country. So yes, lowering interest rates will help make things more affordable and should stimulate the economy.
So the Fed has gotten it to a point where they're saying, rates are starting to drop somewhere across the nation. It depends on where you are. And then they lower their rates, so now people can go out and buy.
Yes.
Got it. Okay. So what does this mean for buyers? What does it mean for the average person out there? And we know from just other episodes that the average house is between $400,000 and $500,000 nationally. That's, all over. What does it mean to the average person buying?
I think right now it's still too early. I don't think it's a huge change. 0.5 point, it really doesn't do that much, I don't think. I think next year, if they do another 0.5 point this year and another full point next year, that's going to be a lot more exciting.
That's 2 whole points.
Yeah. And that I think will start to move the needle. Home prices are so high right now in some of these active markets that a lower interest rate, could actually make the housing prices go higher. Who knows? Yeah.
How does that work? Why would they go higher?
Because more people will see now that they can afford to borrow more money. So.
And they're going to make a run, and then we'll have the whole bidding war thing again.
It could happen.
Do you think now the experts are saying that the Fed intends to lower it over the next year?
Mm-hmm.
Do you think that the Fed would raise it back up?
If all of a sudden, the country exploded and everybody was buying everything, like during COVID when they gave all that free money out and everybody started buying everything, if that happened again really quickly, then sure, they could raise it. I don't think it's going to happen that fast. I think it's going to take time. I think there'll probably be more drops. I think a good rate to be at is like 4.5%, 5% for the country. I think that's my opinion of where a comfortable rate would be when things got down so low.
A good rate for the Fed or a good rate for the banks?
For a lending rate for people to borrow at.
To a real person rate.
When I started investing in real estate commercially, it was around, I was excited with a 7. Then we got down into the 3.5.
Right.
And that just doesn't seem like a realistic number for anybody to.
It's real for the people who are sitting on their 2% homes.
I get it, but I just don't know that that's real for the world. So I think a good somewhere like 4.5 to 5, I think is a good settled number. That's what I think.
So you talked about how this could increase affordability because. The lower rate means lower mortgages and people could afford to buy that home. We have not talked about refinancing. What would it mean for people to refinance? Does that Fed rate affect refinancing as well?
Absolutely. If the rates drop if the banks are dropping their rates and you have a home loan that's at 6% and the bank's offering you 5, then you have a whole point of savings right there. But remember, there's so many factors that deal into this. But again, I don't think a 0.5 point is really there. But it also, the more money you're borrowing, the more important that nominal amount works because it's compounded.
So it's not been that long. Have you seen any difference in the way that people are buying or that people are talking to you?
Since the drop? No.
Since the drop? Nothing.
No,
yeah. People are still working with the same thing.
If anything, we're dealing with some situations now where the banks are still playing hardball and they don't even want to lower their rates. And we're like, hey, it just went down a point, 0.5 point, another 0.5 point in theory is coming. And then they're talking about next year, another full point. Like, where's your flexibility? Where's your forecasting? They're like, nope, this is where we are. So depends on the bank.
Let's talk about the inventory. Has the inventory changed, even with or without the Fed cut? Has the inventory changed at all here in the Northeast? It's been very short. I know in other places in the United States.
Again, it's all based on the town and the area. I still think there's less supply than needed. So
there's a lot less supply than needed. What would be your biggest advice to someone who is buying a home besides just buy? Because we've talked about that ad nauseum, like let's just go buy that house if you want it and you can afford it, do it. But what kind of advice would you give them in lieu of the interest rates? What should they be how should they be approaching their mortgage company, their mortgage lender? Should they be saying any key words? Should they be, what should be their spiel?
I think when you're investing in something, you should make a minimum of 10%, closer to 20, or have some kind of value add proposition that's going to get you closer to 20. And you could do that in any interest rate environment. So if you stick with those rules, then the interest rates become less important.
I don't understand that. Explain that in a different way to me.
So if you go out and say, I'm going to make $200 for every $100 that I spend or something like that, and you can do that whether the interest rate's 5% or 10%.
But if I want to buy a home, how am I making money on it?
Well, your goal is if you're buying a home to live in, right, you shouldn't buy something that you don't think you're going to live in for at least 5 to 10 years. Okay, because that will protect. If you're in something for 10 years, you're protected pretty much from what the markets are going to be. You won't ever be forced to sell. If you're going to go somewhere and buy a house and live there for a year, you don't know what's going to happen in a year. You don't know what's going to happen in 2 years. So you may get caught in a market where you'll lose money.
So what you're basically saying is get the most bang for your buck and look at longevity instead
Look at
of
your situation. You know, if you're going to buy a condo because your kid is going to New York City for college and you're going to go buy a condo because you don't want him to live in the dorms, right?
Right.
If you are willing to own that condo for the next 10 years and that's part of your strategy, go for it. But if you're looking at that as, here's where I'm putting my kid for 2 to 3 years, who knows what's going to happen in 2 to 3 years? You may have to, and then you have to sell it. You may have to sell it at a loss. So it's really figure out what your strategy is, and strategies work regardless of what the interest rates are. Just figure out the strategy, and then you put the product in that best fits that strategy.
I love that. And we should come back and specifically talk about strategy for purchases, especially your strategy, because you always do so well.
Oh, thank you.
You're welcome.
I try. It's been a long time of learning.
Thanks for watching this episode. Now don't forget to like, subscribe, and leave a comment, and we'll see you next time.